Suddenly, autonomy is on the tip of everybody's tongue. We'll talk about Waymo v Tesla in Austin shortly, but first, check this out. Uber and Lucid announcing a partnership.
What does this deal say about Uber, Lucid, EVs, and more? Mark Fields, former president and CEO of Ford Motor Company, also CNBC contributor, joining us now. Mark, your take on this deal.
Well, it's a much bigger deal for Lucid than it is for Uber. And Brian, what you're seeing with Uber is they're spreading their bets, right? They've announced this partnership today where, Lucid's going to provide the cars, Uber's going to provide the ride-hailing network, and Nuro, the self-driving technology. But they also have, they've invested in their approach, as you know, is they invest in third-party AV firms rather than develop the technology themselves, which they tried a number of years ago. But they already have partnerships with Waymo. They have partnerships with VW with their new bus. They have a partnership with Baidu for growth in Asia and the Middle East. The difference here, Brian, is they're forking over money to make investments in Uber and Nuro. So they must see something here.
Or they're just extremely desperate. Now, I wanted to show you guys something that was up on screen. Some details on this deal. The stated goal, is for Uber to deploy 20,000 plus robotaxis over the next 6 years. For context, Tesla aiming to have many millions in that time frame. Elon Musk publicly stating just over the next 12 to 18 months, Tesla likely to be in the hundreds of thousands, if not a million plus robotaxis. Importantly, Uber will be investing $300 million into Lucid. And of course, Lucid at this point in time is burning so much money that, they'd make a deal with any devil. That quite seriously, by the way. They are burning so much money, selling so few vehicles, and losing so much money per vehicle sold, that this will be the story of Lucid's life for many years to come. Raising capital, diluting shareholders, seeking investments, partnering, whatever it takes to keep shoveling money into the furnace that's currently burning it at a staggering rate quarter after quarter. Now, here's where things get interesting. Nuro will build the self-driving technology. So we have the trifecta, 3 independent entities all involved in a partnership. You know how those love triangles typically work out, right? This is an absolute clusterfuck waiting to happen. I wish these companies the best, but this is likely to end in a very messy divorce. And finally, the last point is just a head scratcher. The program would use Lucid Gravity SUV, not a dedicated robotaxi with very low cost to produce, to manufacture, and to operate. This is an $80,000 to $100,000 vehicle, not actually on sale yet. But the Touring Edition starts at $79,900. And the Grand Touring, $94,900. So the question we have to ask ourselves here, number one, can this scale of 20,000 robotaxis over the next 6 years be met? It's possible. Will Nuro successfully build the software, the self-driving technology? And will these Lucid Gravity SUVs be able to competitively price per mile in the same markets that Tesla and other companies will also be operating robotaxis? And just a quick side note, I'm a big fan of self-reliance. And from an investor's point of view, I'm not a big fan of seeing all these different partners mixed in together. Uber providing the platform and some capital, a different company providing the technology, and then a third company providing the actual vehicles. One thing's for sure, excitement is guaranteed.
Asia and the Middle East. The difference here, Brian, is they're forking over money to make investments in Uber and Nuro. So they must see something here that's important for them. But you also got to believe there's a little bit of matchmaking going on here, right? Because Lucid is majority owned by the Saudi Arabia PIF fund, and they also have about a $5 billion stake in Uber. So it's an important deal for Uber. They're spreading their bets, but they're also investing. And for Lucid, it obviously is a very big deal, given that they only sold about 10,000 vehicles last year.
I love what you said. PIF, the big Saudi investment fund, maybe sort of promoting its own investments by...
Entirely possible. And also, just to be clear, the Saudi investment fund, currently Lucid's primary sugar daddy, with near infinite capital, meaning in theory, Lucid can continue to suck from the teat of their Saudi sugar daddy indefinitely, even if the company itself is losing stupid amounts of money, and were it not to have a very wealthy Saudi sugar daddy, likely to have the plug pulled much sooner rather than later. So don't be surprised if we see Lucid limping along for years to come, even if the business itself continues to lose crazy amounts of money. By the way, I do wish Lucid well. I hope they're successful, but hope is not a strategy. One can wish all they want, but we do live in reality. And Lucid is struggling to sell vehicles. Why? Not everybody can afford $80,000+ US a pop. And one thing they're not struggling to do is lose enormous amounts of money.
I'm sure they had a hand in nudging this. But here's my take, though. And Lucid, the Gravity, beautiful car, starts, I think, at $95,000. My first take, Mark, was, aren't we supposed to get smaller and cheaper? This is a pretty expensive driverless taxi.
Well, Brian, you're exactly right. Here's the thing. Nobody's talking about what's the business case around this. How much
are they going to charge to make money on Kelly or I rolling around in the back of a $100,000 EV?
Exactly.
Well,
great question. By the way, did you catch on the hot mic there, Kelly, the co-anchor, saying exactly as Brian's asking this question? In other words, how the fuck are they going to make money on this service? And it is a really good question to ask. We know Tesla's business model, cybercabs, low cost of production, low cost of operation, massive scale, fully vertically integrated, not needing to pay a little bit of a margin to all the different partners involved in this. They will have the most competitive cost per mile by a significant margin, no pun intended. So the real question is, how in the flying fuck, when you're putting an $80,000+ vehicle on roads and there's a bunch of partners involved, can you compete on cost per mile for a comparable service? And the answer is you can't. It's G, folks. But again, I wish them well. I'm just telling you now how this will play out. The only way this thing continues to operate years from now, if they could even scale in the first place, is if their Saudi sugar daddy continued to peel off wads of cash just to keep up appearances.
Well, it's not only just $100,000. That's for the car itself, the Gravity itself. Then you have to add the technology, the compute power, the LiDAR sensors, etc. So you're exactly right. The question is, with $20 rides, how many do you need to make money on this? And so, I think the risks here are obviously the high cost per unit. Secondly, is the ability for Nuro to scale. I mean, they've done about 1 million miles in deliveries. This is passenger transport, which is a different kettle of fish. You got competition, whether it's Waymo or some of the other ones that are coming out, and then the regulatory hurdles. But yeah, nobody's really talking about how you actually make money here.
Well, we are. That's the point of this segment. I mean, how do you do that? I can see it, a $25,000 car, like you said. You just drive this driverless car. Anytime you're not charging it, that car's on the road, picking up passengers, making money. Listen, Lucids, they're high end. These are luxury automobiles. I like the deal, the idea of it. It just seems like an expensive car to be doing this with, but maybe there's a market for that.
There is actually a market for extremely high end, super luxury, at least slightly premium vehicles to pick people up, drop them off. The problem is, one, that market is not particularly large. And two, Uber themselves are already somewhat addressing this. They've got the Uber Premium. In some regions, it's known as Uber Comfort. You're guaranteed to have a fairly modded, fairly reasonable, fairly comfy vehicle. But for the vast majority of people using a Robotaxi service, or today an Uber or a taxi, they don't really care. As long as the vehicle is comfortable, safe, and the driver doesn't smell, it's just a service to get from point A to point B.
TV news anchors and global kings.
Yeah, there is a market for it, but it's limited. But I think to your point, Brian, and your question, I think the other ways they're probably trying to figure out how they're going to make money is through advertising in the vehicle. That could be lucrative for them. Now, could it?
Certainly a possibility. They might be considering this, but bro, can you imagine? It's an untenable combination to be pitching to consumers a luxury high-end premium. You'll pay a fuckload more than a comparable service, but hey, the vehicle's really high-end service, and at the same time ramming advertising down their throat. It's just that they don't belong together. You could make the case for the lowest cost per mile robotaxis on the planet being riddled with advertising to even further lower the cost to consumers. But on a high-end premium service, which they'll have to have premium pricing to even break even, it's just not the place to embed advertising.
Could it be to, overcome the high, cost per unit that these vehicles are going to have and the revenue they're going to generate for, the ride share? I think they're going to think, obviously advertising in the vehicles and maybe some other ways to kind of make this business case work for them.
So I'm curious, Mark, what you think this would mean for Tesla, for Waymo?
Well, I think what you're seeing here right now, Kelly, is it's a bit of a breakout moment for AVs. I mean, when you look at Waymo, you've seen what they've announced, over 250 million rides, things of that nature. They're pretty ubiquitous in cities like San Francisco. So, I think consumers are starting to get used to, autonomous EVs running around the cities. And you're seeing all the competition now starting to kind of ratchet up efforts like, Tesla, they're started in Austin, they're expanding. You got Waymo, who's announced more expansions. You have this deal here. Who knows what's going to happen with a company called Zoox, which is owned by Amazon. So I do think you're hitting a bit of a pivotal moment here, a breakout moment for EVs. And again, the question is ultimately, what's the business case? Who owns these vehicles? And, how are you going to make a return on them?
So well summed up by Mark. What is the business case and how will you make a return? Tesla's the only company that's fully vertically integrated, the only company with expertise in mass manufacturing compelling and affordable electric vehicles, the only company who's developed a entirely new manufacturing system for a dedicated cybercab, a specifically manufactured Robotaxi, removing all the unnecessary bullshit and mass, aka cost, and the only company that's going to be able to put an incredibly compelling, safe, and efficient Robotaxi on roads for give or take 20,000, maybe 25,000 US dollars. The next closest, as far as we're aware, easily spending more than $100,000 to put a not even comparable vehicle on roads. Might do a comparable service, but looks like shit. If those are the only two things we knew, it'd be G fucking G. Obviously Tesla wins. But that's not all we know. We also know that Tesla has developed a generalized solution to autonomy. Will scale rapidly. Oh, and by the way, because they actually mass manufacture roughly 2 million vehicles per year today, even if the other two things weren't true, even if everyone somehow magically had the exact same cost and the same technology and could scale as rapidly in terms of capability, not needing a pre-map, blah, 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 they can't because they don't have generalized solutions. Even if they were on equal footing on those fronts, which they are not, Tesla's the only company that cranks out tens upon tens upon tens upon tens of thousands of vehicles on every factory, every quarter. And on that note, today Waymo announces their first service area expansion in Austin, Texas. Quote, north to south, we're covering more ground in Austin starting today. Safe and fully autonomous Waymo rides only on Uber. See you on the road. We've got a comparison between the before and the after service area. So well done to Waymo. Some important context from Grok Heavy. Waymo first began operating anywhere on Earth on December 5th, 2018. Their service area first expanded on March 30th, 2022. So it took 3 years, 3 months, and 25 days for Waymo's first service area expansion. Of course, at this juncture, it's worth asking why. Did they not have the vehicles? Were they still busy pre-mapping? Was the service not safe enough to feel comfortable to expand? Could they not get regulatory approval? Good questions to ask. So in short, first expansion from Waymo took over 3 years. Separately, Waymo first began operating in Austin, Texas on March 4th, 2025. Their Austin service area first expanded on July 17th, aka today. aka it took 4 months and 13 days for Waymo's first expansion in Austin, Texas. Tesla first began operating Robotaxis in Austin, Texas on the 22nd of June, 2025, and first expanded their Austin service area on the 14th of July, 25. That's 22 days later. In essence, it took Waymo roughly 5 times as long to expand their service area in Austin versus Tesla, keeping in mind that Tesla's playing this on hard mode because not only was their task to expand safely, but they have to learn how the service is working, how their app's working. They're building this entire thing from the ground up. This was the very first time Tesla began operating. So naturally, they're not just dealing with can our vehicles operate safely in an expanded region, although that's obviously important, but also how are people using the app? What improvements do we need on the app? Are there any bugs, any issues, any errors? What are we doing for pathfinding? What if there's construction and the vehicle needs to get around and go outside the geofence? What does it do? On and on and on and on. For comparison's sake, Sawyer Merritt posting this. So Waymo appears to have almost completely swallowed Tesla's Robotaxi service area in one big gulp. It's going to be very interesting to watch the tit for tat between Tesla and Waymo in Austin and beyond. Now, there are 2 possibilities here. Number 1, this is a total coincidence. Waymo just so happened to be ready to expand the very same week that Tesla expanded their service area, which again was about 5 times quicker than Waymo did. That's possibility number 1. Possibility number 2, Tesla almost forced Waymo's hand. Of course, either way, Waymo didn't just miraculously HD map everything else in this expanded area between Tesla's expansion and today. Takes a hell of a lot longer. The question then becomes, why didn't Waymo do this sooner? We go back to, was this a coincidence or did Tesla force their hand? And if Tesla forced their hand, do they have enough vehicles to maintain reasonable wait times in this larger service area? It's great to see the competition heating up here now because, believe me, I'm sure the engineers at Tesla go, all right, guys, dick joke's over. Let's focus on expanding once again. The heat is on. Waymo facing some stiff competition from a much faster moving company. Again, we saw the time difference. Tesla did the first expansion in Austin about 5 times quicker. And I'm sure engineers at both companies now are quite fired up. As I mentioned earlier though, Only one of these two companies has the capability to crank out tens of thousands of autonomous capable robotaxis every month just in the United States. It ain't Waymo. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients, plus has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs.